Nathan here. Today, the Reserve Bank of Australia shocked economists with an interest rate increase, taking the official cash rate to 3.85%. Markets predicted that there'd be no rate increase 1 month ago. The cash rate has officially risen by 0.25%. Cumulative increases since May has reached 3.75%, which is the most rapid tightening cycle we've seen in a generation. Many economists and money market experts were surprised by the decision by the Reserve Bank today, given their rhetoric and recent reduced household spending suggested that there was going to be no change. Even when 21 out of 30 surveyed economists predicted the cash rate would be left on hold today, the Reserve Bank Governor, Philip Lowe, said there's still a lot to be done with inflation at a higher level than they'd like. The Reserve Bank of Australia aims to return the target level of inflation back within a reasonable time frame. And they said they held rates steady in April to assess the economy and this current state of play. Inflation is forecast to hit 4.5% this year alone, and for it to return back to 3%, which is the Reserve Bank's target range by mid-2025. Now, Dr. Lowe said the persistence in service inflation was a real concern, and 3.2 million households will be affected by today's increase. Further increases may also need or be required to tame inflation as things further develop. Governor Lowe's left everything open. So, Jaden, we've seen this shock move. Many had thought that rates were going to be on hold today. What does this mean for borrowers out there, people looking to get in the market? We've seen borrowing powers reduced by nearly 30% since rate rises happened. So what can you do firstly if you have a mortgage?
Yeah, like for example, a family with 2 children and a household income of $150,000 have actually seen their borrowing capacity fall by 24% to around $690,000 over the last 12 months. We have seen this rapid tightening has directly impacted borrowing capacity and also impacted obviously how much you have to spend a month in repayments. You know, the cash rate, like you said, has gone up almost 4%. It's insane the impact that's had. But practically, I guess on the ground, what the Reserve Bank was seeing is they were probably concerned that there was a bit more heat in the market. Even yesterday, the Commonwealth Bank and ANZ Bank actually revised their forecast on the property market. A couple of months ago, they were saying Sydney property market was going to drop this year. Now CBA are saying that Sydney property prices could gain as much as 5% this year, and Melbourne up 2%. So they've actually revised their forecast in light of just the activity in the market. Obviously, the jobless rate has been flat and low, there hasn't been any big jumps in unemployment. And the big spotlight, the big, I suppose, focus on the Reserve Bank is the immigration numbers. We've got sort of once in a generation increases in intake of migration, people moving back to Australia, people moving to Australia for jobs. There's been changes to some of the immigration visas as well in that whole process. And I think in the context of that, they were probably concerned of trying to simmer down the market and stop things from going too hard, too fast, perhaps learning from lessons of the past. But practically speaking, we've still seen a lot of demand there.
Exactly right. And they said the economy, so the Reserve Bank said the economy was still too resilient despite higher borrowing costs. Unemployment has remained stable at a 50-year low of 3.5% in March, and services inflation has accelerated at the fastest pace in over 2 decades in Q1. We saw headline inflation came down to 7% from 7.8% from the March quarter. And the Reserve Bank's target band in inflation, as I talked about earlier, isn't expected to be hit by mid-2025. So I guess they've seen a number of those metrics there, still seeing it too hot. I mean, Jaden, for the average mortgage holder, with the rate rises since May of last year, that has increased mortgage repayments. So 3.75% increase in the cash rate has meant nearly over $1,000 to the bottom line for someone with a $500,000 mortgage. If you've got $1 million mortgage, that's added an extra $2,177 in repayments. What can people do out there?
Yeah, so one thing we have started to see is, interestingly, I guess, as the Reserve Bank's reaching the peak of the current interest rate cycle, we have started to see the fixed rates come down. So ING, Combank, a lot of the banks have reduced their 1, 2, and 3 year fixed rates. At the moment, I was having a conversation with a customer, and interestingly, ING say 2-year fixed rate is the same as their current variable rate. That's obviously going to change probably in the next couple of weeks, but we are seeing people consider taking out fixed rate. Now, you need some caution with that because you could end up fixing at 5.5% now, and rates could change in the future. So you probably need to look at what your plans are in the short to medium term if you can have the ability to make extra payments. Historically, looking back, COVID aside, fixed rates haven't worked out as well financially for a lot of borrowers, but it gives you stability. It means you know that your payment's going to be the same for the next 12 months, for the next 2 years, for the next 3 years. So it can be worth considering, but everyone's situation is different. That's where a mortgage broker like us can help and sit down and go through the pros and cons of that sort of structure.
Definitely. And I think as we've seen these rate rises come through at the fastest pace in a very long time, borrowing power is a consistent issue we're seeing for a lot of borrowers. Here at Hunter Galloway, given we're mortgage brokers, we can look at situations and in some cases, look at ways of increasing your borrowing power. Simple things like closing credit cards. Did you know for every $10,000 in credit limit you have, your borrowing power actually reduces by $70,000? Jaden, did you have any other tips here on ways you can potentially increase your borrowing power?
Yeah, the other one that we're seeing a lot is HEX. So I had a conversation with someone earlier this morning. They had about $40,000 in credit cards, and it literally reduced her capacity by $200,000. So the credit cards are having a bigger and bigger impact on everything, and equally HEX. I had another client who had a HEX. It was almost paid off, and it made a $150,000 impact to paying off a $5,000 HEX. So all these little things can add up. Also, the way that banks look at investment income. So some banks will shade or they'll reduce your potential rental income by 30%. They'll say, all right, you might get $500 a week rent, but we need to take into consideration agents' fees, marketing, vacancies, that sort of stuff. So we're going to only 70% of the rental income and that's it. Others will use up to 90%. They'll be a bit more realistic to what you're getting. All these things have a pretty meaningful impact on your capacity. So get a mortgage broker that can help you out with that and see what's going to make sense for you to help maximize and even help your cash flow. The other thing we are seeing as well, if you've got an existing home loan, is potentially renegotiating with your bank or looking at moving. The gap between existing mortgage holders to new customers has never been so big. The banks are unfortunately giving bigger and shinier and better deals to the newer customers. So keep that in mind. You want to have your mortgage broker out there helping and renegotiating and staying on your side and making sure that the money's staying in your pocket rather than going to that bank's.
That's it, Jaden. So guys out there, today, the Reserve Bank has increased the cash rate again by 0.25%. If you have a mortgage, get in touch with us. We can look at reviewing. There's a bunch of offers, cashbacks, incentives at the moment where you can move and potentially certainly be better off by getting $4,000 in your pocket plus a lower rate. So get in touch with us. Or if you're looking to get in the market for the first time and all these rate rises have impacted your ability to borrow and your number that you're hoping to achieve, once again, reach out to us. Here at Hunter Galloway, we're mortgage brokers. We assist. There's no cost for the service. We work with people right across the country. Call us on 1300-088-065 or visit our website, huntergalloway.com.au. Guys, as always, thanks for watching. Leave a comment below. Will this rate rise impact you and how so? Guys, as always, thanks for watching. We'll see you next time.